This conference will now be recorded.
Hi everyone, it's Patrick, the Adamus Principal. The time is about 8:30 and we are another pre-Asia. Hopefully I'll send it out before Asia Open, but it's going to be a massive night tonight. It's all about Trump and G20 in Buenos Aires with Xi. Bit of a damp squid, or is this the start of a humongous Santa rally? So before all that, we'll come to all that later. Before all that, I want to introduce you to an absolute living legend of mine, Beat. Hello, how are
Hi,
you?
Patrick. How are you?
I'm very well. I'm very well indeed. Um, yeah, so we were just talking a bit offline, and it's just you think that you attach you get a narrative, you attach it, you something on, and there's always some twist, or there's something that's going to kink the from A to B as a trade, or what you do. And I think I think you've mentioned this to me before on the show. You've got to dance in between the narratives because one's coming up here, one's coming up there, and it's just it just never changes. It's never been. I mean, you were saying offline, it's been a really long year. I don't think it's ever been so exciting for me as a trader, and also so difficult.
Yeah.
Is it the same for you?
Yeah, to be honest, I mean, there were parts of the year which were okay, as in sort of clear story, but I find the second part of the year has become very difficult because we have heavy weight stories. Obviously, Brexit didn't help, which is just another, let's say when you have the political side of the stories, we had the NAFTA story, so we had a very volatile Canada, Mexico peso, all stuff that just suddenly start to move based on a headline that suddenly is 180 degrees from the one the week before. So I think the tough part is, or always has been, when politics is involved, it gets tough because it's more emotions, it's more, hard to read because you just cannot judge, politics, what the outcome is going to be. And I think we had more politics this year than we had, in the last few years, whether it's Italy, whether it's NAFTA, whether it's Brexit, even now sort of the whole US China is not just economic, it's political as well. And so we keep on seeing the risk. We keep on having to juggle stories that run at the same time. And so that's why probably now I have withdrawn a little bit more to December probably for me is going to be more hit and run, chip and charge than it is macro positioning. Because it's a time of year we still have this big Brexit stuff out there, which God knows what's going to happen. So we have a lot of these micro stories which you run for a few days before you wonder whether the next story is going to be. And a lot of the stories are not running the same direction. If all the stories would sort of run the same way, as in risk on or risk off or dollar up, dollar down, it'd be okay because then you have three stories running for one direction. But every story we have contradicts, the move before, and that I find, and they're all good stories. So it's not like they can say, oh, that story is a lot more important than that one. No, all of them are equally, good, or could run the market for a while. And that's why I think it's like what we said, is this sort of trying to evaluate which story is, there on the day. And it seems no story makes it past 1 week right now.
That's right.
That's
And that's great. Sorry, Beat, you were saying.
no.
Yeah, no, you're absolutely right. And then you get a story that half joins onto the main narrative and then twists into something else.
Yes.
Um, for me, last week, before we go into to this weekend, the big thing for me was obviously the neutral comment from JP. So there was some proper selling of the dollar, not like proper, but there was some big dollar got hit, and we, as traders, we scour the wording. You know, we know what the vernacular is like for most central banks, and you know, on paper, you know, what was really different? Well, I've looked at the statements. I looked at the previous Clarida interview on online, and then JP's interview as well. And you know, it's what that whole process told me was quite a lot. And the takeouts I got were the curve priced it in way before the dollar did. I think with one hike for 2019, and I think it's more in line now. So I guess the other thing as well, which will probably come up on the second topic, is you know JP's rhetoric and tone and the nuance on neutral. I've got good reliable source to say that this neutral is a band, and he certainly, with his interview, he certainly said it is an area that they would consider pausing. And at the moment, it's my understanding this band is between 2.5 and 3.5%. So if we're just below the bottom of that band, I mean, you know, what's the big deal? So there's that in difference with way below neutral, which was the previous statement, and that's why the markets got so worked up.
Yeah,
so
I mean, for me, what I didn't understand last week was, and I think the market got actually spoofed by Clarida on Tuesday.
Yeah.
What I don't understand is Clarida was the one that 2 weeks ago got the ball rolling. Then he was like, we obviously all watched him on Tuesday, and on Tuesday he kind of backpedaled a little bit. So the market has sort of gone to sleep. And so what I don't understand, whether Clarida was too early 2 weeks ago, and it's really the boss's call to make that speech rather than the vice boss, if you want. So I didn't understand that Clarida backpedal, and then Powell sort of rolled it back out again. And I think that is where the market got really, you know, almost surprised. And that's why I think we have seen the reaction the way we have. Now, that's one thing. The other thing is what you mentioned, and that is, and there was a lot of debates in the blogging space about, you know, a lot of people saying, he wasn't dovish. And I wrote something as well, and I just say, okay, let's not say dovish, let's say he was less hawkish. Now, the next step is what you just said before, is the market already been a lot lower in pricing of the hikes for 2019. So if you want to split hairs, you can say all that JP has done, he has aligned the Fed dots more with the market. How much, we don't know yet. But he has definitely, the way he spoke, he definitely has come closer to the market. Now, you and I, and many of our followers or sort of people in the market always argue that the price is right. Or the market is right. So that would then again mean that what JP said shouldn't move the market in a big way, because the market has already priced in just one hike for 2019. So really, the Fed, and this is, you know, Bernanke has done it, Yellen has done it, now JP is doing it. It was always the Fed that had to align with the market. It hardly has been the other way around, that the market was running with the story, then started to reprice, maybe back, you know, on the data, CPI not overshooting, oil collapsing, and so on and so forth. And the market has already taken rate hikes down quite a lot. So if we truly believe that the market is right, then we shouldn't see big moves from JP. So that's the only flip side, which I'm not yet sure how to really judge it, because I didn't trust the dollar for many, many weeks, as you know. Because to me, the dollar has actually made no progress since many months. You know, we spoke before that the 115 break was an accident because of the Turkey, the Turkey blowout. The 113 break was when the market panicked on Brexit, and now we're kind of coming back again. So the dollar itself, for US reasons, hasn't really moved for quite some time. The one thing I would say, as maybe ending that sort of JP comment story, the only guys that really liked it was dollar EM. Dollar EM has sold off on Clarida 2 weeks ago and has never really come back. So for the dollar emerging market side of it, this whole easing of or the upside pressure on yields that has sort of slowed down or even stopped, that's where you could see the biggest benefit, which probably makes the most sense, because I think emerging markets were under extreme pressure, or there's double whammy from risk off and high US yields, and now we removed, 10-year is now just below 3%. That's 25 basis points lower or off the peak, with the chance that it's maybe, we might not see as many hikes as we feared. So dollar EM has reacted the strongest. I still believe if everything would be all right in Euro or in Europe, euro dollar will probably be way back above 115 towards 116. That's probably where it sort of belongs, with everything being equal. But then we have the European story, which again is another conundrum.
Yeah, it's funny. I mean, I think, before, as I said, before we talk about this weekend, I think I'm in more of a camp to be selling rallies in the dollar. Let's put risk aside, risk on, risk off aside.
I would agree to that.
And for a number of reasons, I just think even, let's just say the OIS curve is in line with spot, right? Which I think it could be. It's completely way out of whack with the dots, which were done in September. I think the dots said 3 to 4 hikes in 2019, which is not going to happen. No. That's going to be rewritten in the December hike, which is in 2 weeks. So it's almost like, I think you said to me as well offline, often the dots go fall in line with the curve and then the dollar as well. Yeah. And, on a really quickly side note, I remember Carney saying something about unemployment, 5%. If we hit that, it's going to be, they're going to stop something. But then basically it was Carney doing what Carney loves doing, is a bit of a flip-flop, but also challenging the market. And guess what? The market reached 5% unemployment and nothing happened from the central bank. So it's the market is the boss. Let's not forget that.
To be honest, like we said, the other message to sum up JP, which I keep on going on about and not many people talk about, is basically it just tells us watch data. We watch data, and like I said, I probably in this forum I said many times, this Fed is truly the first Fed, I believe, for a long time that actually is watching data as we do. I still believe JP wants to get rid of forward guidance.
Yeah, about time.
So we have every meeting is live in 2019, so that means every meeting has a press conference. So that is exactly for getting rid of forward guidance. If you have a live meeting or a press conference, every meeting means he can guide the market, not as in telling you what he's going to do in 3 or 6 months' time, but actually explaining himself what they're doing. So I think they're taking some of what I hoped will happen, should have happened a long time ago. They're starting to take back, this forward guidance, which to me has really no place anymore in the current policy. We needed it in 08, 09, 2010. I agree, because the market needed to be taken by the hand. that's no longer needed, and I think central banks getting tired of being boxed into a corner. With saying this, saying that, and have to adjust it, blah blah blah. So I think it's going to be a different Fed in 2019, and so I think I would love that we move into a world where we watch data. So we really all have the same chance. We look at the data, decide what it means for the Fed. Okay, blah blah blah. And the other thing is what we I think discussed a few times before is we didn't have real data surprise for quite some time on the upside.
That's right.
So even from that angle, it makes terribly sense what JP. I don't think he tried to surprise anyone. I definitely disagree to some of the people that talk about he's giving in on pressure from Trump. No, not at all. He's doing what he's supposed to do. Inflation hasn't, he was right, it's not overshooting on the top side. Data becomes a little bit more mixed. The global picture, a little bit more mixed. So he's actually doing his job. And those people who say, oh, he's giving in to pressure from Trump, I think they're just outright wrong. But that's just my view about it.
We like your view. It's good. I like a good story, and it would be nice if you saw Trump and JP in a secluded dinner somewhere.
Yeah.
Trump saying, "Hey, look, come on,
No,
over
no
a big fat New York steak.
Yeah.
I'm sure that's what Trump eats every night with his hamburgers."
Yeah.
But I mean, you're absolutely right. I guess there's always conspiracy stories about timing, coincidence, and all the rest of it. But it can't hurt Trump. All of this, and oil going to new lows can't hurt Trump. And there's a few stories coming out about that one. But
that's conspiracy, I believe, a lot more than the conspiracy around Trump and Powell. That Trump did do a lot with the Saudis to get oil where it is. That wouldn't surprise me at all. That is, the oil price has always been weaponized one way or another. And I totally agree with you. This sell-off is very, let's say, part one I got, right? The market got long it before the Iranian embargo. Then Trump spoofed them all by giving this exclusion to 8 countries, one of which was China, that they're still allowed to buy oil from Iran. So that was the first leg down in oil, caught everyone by surprise. But from then on, I'm not an oil expert, but I'm looking at the move. And, at some point you just ask yourself, and this move has gone far beyond just the market being a little bit cold or this or that. So, that conspiracy, I believe, or let's say I could believe.
Well, let's not talk about that conspiracy because we don't have we're not giving the people the chance to respond live. So, but if you want to know, direct message myself or Beat. But the fact is, oil is falling out of bed as we speak, and it could go a lot further down. So that's fantastic. So I guess let's brings us to this weekend. I have a confession, and I haven't been to confession for quite some time, but I'd like to be absolved of all my sins. I went long risk on Friday, Aussie yen, around 90s, because I just thought I haven't put the house on it because that would be ridiculous. But I had a little punt and I went long on Aussie yen around 90s because I thought I thought it'd be window dressing. I blogged about it. I thought it's all about the Santa rally. It could have a little bit of legs for a couple of days at least. And I think the only risk pair I was prepared to go long risk on, I wouldn't have touched euro yen at all. So Aussie dollar or Aussie yen, and I did. However, we are going to open tonight in about an hour, and My thing is looking how the market will react into Asia, into London tomorrow. There are some key levels for me. Obviously, the risk is that there's all signs for a risk-on rally at the moment. But will these levels hold? The S&P is, it was grinding up last week. It did pretty well. It was just below some key big moving averages. Will it break those? That's the key for me. And, Aussies, will that stay above 60s? That's a key thing. And, Aussie yen above 83. Will that touch 83.50 something? I mean, that's a key thing. And euro yen, we need to really break above 129.30 area and stuff like that. So let's just see. But what are your thoughts on that one, Beat?
To be honest, first of all, congratulations to your little sneaky feeling on Friday. Aussie opened in Wellington at 73.70, so you 60 points higher on the open, or let's say the Wellington Open, which is not yet the true open. Well, it is and it isn't. We have Aussie yen is trading around 83. We have dollar yen is at 30 pips higher at 113.80 from 113.50 closed. Even a euro is higher at 113.60 from wherever it closed, can't remember. I think around 113.20. So euro is up 40 points as well. So the whole euro yen actually surprisingly is only around 129.30. So I would have actually thought that would be higher, but it isn't. To be honest, I did see the chance of a risk rally on the open. When I did see the news, I didn't particularly think one is needed. But I think what we discussed offline before is two things. Any other month than December, I think like it would have sold off. In traditional buy the rumor, sell the fact story. Why? The ceasefire, or what we got from Trump and Xi, was exactly what the market was looking for. Just a ceasefire, nothing gets undone. There's a window of opportunity where the two parties going to sit together. So the tariffs will not be hiked from 10 to 25% on January 1st. So that is sort of rolled down for 3 months to see whether the two parties make progress in those 3 months. They're not making any progress, boom, it's going to be tariffs going to be imposed on April the 1st. Now, coming back to the season is like you were going on about the Santa rally, and that's probably still what the market kind of tries to achieve, is even though we should get buy rumor, sell the fact, because people know there's no more news gonna come between US and China, most likely, for the rest of December. So we have one risk factor is probably gone. The market now can as well go like, and I'm sure they will do next week, everyone will suddenly talk about the dovish Fed, just to kind of suit the stock market rally as well. So we could get onto a story that, in my opinion, isn't a story. So I will not be long risk. Lucky for great that you went long on Friday. So I'm still very tiny short some risk from like 4, 5, 6 weeks ago, which I just leave there, and I'd be looking for levels to probably sell or do nothing. So like you, I will watch. Tonight is a lot of noise. Tonight, if you've been long and you make 1% and you want to take profit, fantastic. Tonight is not the night to do fresh risk. If you're flat and you suddenly go like, oh, I need to be long, I think it's the wrong thing to do. So I would wait for a proper Asia session. I would wait for the European session just to get a little bit of a feel, and then we're going to have Wall Street open, and then we're going to really know what they think, because we had like a 200-point rally into the close on Friday, probably from some people that did have the hope of something to come, and the market has been playing this. So we at the bottom end of the expectations. So that's why I say, and in my brain, that just, like we often trade, if you get the bare minimum of expectation, you just can't push too hard, But as I said, the time of year makes it a little bit more critical. Now, that's maybe next week. And then I know I've been going on about this for far too long, but December 11 Brexit vote for me is just, it's another story that could just shake the markets. If we get a no, we get a sell-off of sterling, we start to get a sell-off on equities in Europe, it's going to go global, and again, we both know, we both don't know what the outcome is if Parliament votes no on Brexit. Obviously, it's not just cliff edge, so it's not the bearish story of Brexit, but it's uncertainty. We could face a call for a no confidence vote in Parliament, or the opposition is pushing for new elections. So there's a lot of noise going to be around I think the noise actually starts tomorrow already in Parliament. There's like 5 full days of Parliament discussion on this bill. So yes, Monday, Tuesday is about G20, and very quickly could be forgotten again. So I'm not chasing risk. I will not go long risk. I rather miss it, because even beyond, and nothing to do with Brexit, I'm still a risk bear. For complete different reasons. So I don't need the trade war. I don't need the Fed. It's just, for me, we have hit a cyclical top in equities as much as we probably hit a cyclical high in the economy. So this is now just the bear, the sort of bigger fundamental view of equities for me are just game over. Game over doesn't mean like we have to have Armageddon. It's not means we have to drop 5,000 points in the Dow in a hurry, but it's going to be a downtrend. And I think I draw in just a sneaky trend line in the Dow, which I think comes in around 25,900 or thereabout, which is the sort of downtrend from the high. So that's something I'm going to be monitoring early in the week. So that's about another 400 points ish away, just to see if the pattern of lower highs continues. Sort of a downtrend. I just can't warm up for a risk rally on conspiracies like Santa rally or stuff like that. If I see that the news just is as expected. It's basically what we discussed last week. Wednesday, Thursday, Friday, we both talked about ceasefire. That's all we talked about, and that's all we got.
Yeah, we got window dressing, ceasefire,
and
nothing.
Actually, I would even say the 90 days that the US is demanding from the Chinese is a very small window for politics in general, for two heavyweights like the US and China, where the starting point is so far apart from each other. I don't know some of the demands we know, but apparently the US has quite a list of things the Chinese are expected to do. and you know what? There's no chance. There's no chance of that. But you know what? That doesn't make a difference that maybe risk rallies the next few days.
Yeah.
It's just I'm on this bigger picture where I cannot, I cannot run on a story that I don't believe for a minute. As you know me, I'm bearish or bullish, and that's what I do. I just don't believe in it. Could they work on something? Yes, possibly. Is the market really, if you think about how much did we sell stocks in the last 3 months based on the trade war? We didn't really. And we talk about trade war every day, but we did see a sell-off a few months ago, but we recovered from that one. So I'm just that's really my point. I can't be long risk. I don't believe in it for a second.
That's good. I've got a couple of things.
Which is making a market, right? If we all agree, it would be boring.
I know it'd be boring. Therein lies the market. A couple of things I want to bat back to you. have you ever been silly in December when you were like in your 20s and your 30s? I know I did a lot of very
Yeah,
silly things in December,
yeah,
and I think the market is no different. I also want to have a look at this chart, right? This is the Aussie dollar. It's on the weekly,
yeah,
and I remember around this point, if you can see my cursor,
yeah.
this was
74 and a
very
half-ish.
very sticky, and
Yeah,
so we're about to open in Asia above 73.60, I think.
yeah,
The key thing for me is if we hold this level, because we're gonna open above and it will probably retrace. So this is on the weekly, so put it on the daily.
yeah,
This level has been a big level for me for a while. 73.30 to 60.
yeah,
60 better, and
yeah,
all this volume here is very sticky.
yeah,
So the key thing here, and obviously your two big moving averages, will it stay above 73.60 into London? That's what I'm going to be looking at, because
yeah,
if that does, that's not, that's a supportive sign, because it's such a big level on the weekly, and I
yeah,
just think that's one of the stars aligning, one of quite a few stars aligning for a short-term risk-on
yeah,
position. Equities, obviously, they've been taking the lead for a number of weeks. They've been charging and they've been calling the shots, and what the S&P will be doing, what the Dow is going to be doing is going to be really key for me as well. The other thing, you do have a dovish slant, and depending on what happens with the next hike, there could be a very dovish hike. Let's just see if, I mean, euro yen hasn't really, let's just see what happens to that. But these are the key levels up here for me. They're pretty nice on the daily: 31.95, 32, 31, and 130 at 130.50. I'm not really interested in dollar yen on risk for obvious reasons. But 10-year yields, if we close below 3%, that's going to be significant, because
yeah,
there's going to be a lot of people out there. There's going to be a lot of treasury, short treasury bond guys feeling that squeeze
yeah,
when yields close below 3%. That's going to be very painful for those
yeah,
bond bulls. Yeah. So if we close below 3%, you're going to get a lot of people saying, "Oh, that 3.25, that was a failure."
yeah,
You
yeah,
know, that's a sign. That's a significant sign. So in short, my position is long risk but small, and look at price action, look at key levels to if they've been broken in Asia, they need to support on the daily. They need to close above on the daily, especially that 73.60 and the Aussie. Those are things. Look at the S&P. Will it crack those moving averages? Will it when it does retrace, support that? And then that could be an indicator for the rest of the week. However, I'm offered up on key levels on risk pairs as well. There's no question about that. That's just my thinking. Because December's December. I mean, it's a
yeah,
there's going to be so many people out there who do some really silly things, but hopefully what we said today will help you, not make silly mistakes, and just, you know, I just feel that a lot of people get drunk, not literally, but
yeah.
get drunk on their decision making, and
I
that's why they
mean,
call it the Santa Rally.
to be honest, if you ask my mistakes in my younger years, was exactly that, fading
Yeah,
in December, right? Which is very dangerous. And then I got a little bit older and more mature and realized that December can be a very good trading month where things tend to carry on further than you think. So
yeah,
usually we get like the move starts, and that's when people start to fight. Suddenly something that usually moves one big figure moves two big figures. So you think like it moved too much, and it moves another big figure. We didn't really have big Decembers anymore in the last few years. So the market got maybe a little bit complacent here. We could. So I'm definitely, there are certain currencies I don't touch in December, like Scandis. We're obviously not talking about Scandis very often, but that's a currency pair to avoid in December, August and December. But like you said, you know, if I fight this risk rally, it will be with my usual risk management. So I'm not, you know, I'm not gonna destroy my year in the last month. And
No.
you know, if I decide to sell the rally in risk and it just keeps, you know, carrying on, I might just, you know, stop out and that's it for maybe December. Or shift just to hit and run stuff, you know, dollar yen, euro dollar, Aussie dollar, rather than positioning myself on a macro basis. Just trade the days, you know, look where the dips go to, blah, blah, blah. So the stuff we sometimes do, and that's where I usually withdraw when I think the macro risk doesn't make a lot of sense or doesn't offer a lot of good risk reward. I then just go back in my shell and just trade the days, try to nick 20, 30 pips here and there. And suddenly the story comes back, right? So I don't feel I have to always have a macro position. Right now, I'm opposite of you. I still have two tiny short risk position, euro yen and Aussie yen, but both are still in the money because they fought from like 6-7 weeks ago from higher up. So that's why I got a bit lazy. I didn't really do much with them. When I sold the last risk rally, I never, in the midterms, I never sold enough up there. That's why I could never play with it. So I never had enough to kind of do what I usually do, which is you know, nurse a core risk. You know, if I sold enough, you buy some back, sell them back out, and improve your average. This time in both, because I had to wait to see if this midterm election, you know, carry a little bit over for a few days, which I never did. So that's why, you know, I just felt okay. I want to always have a tiny short risk until the day I decide I don't want it anymore, which maybe this is the one to now sell into to get finally some better levels. But I really don't know yet. I do not pre-commit, so I play a little bit of central banker. I don't pre-commit. I'm gonna watch the market in London hours tomorrow, then the US to see what they do on the equity side, and then try to see where the price action in equities gives something away. Because I don't think it's the FX that is going to be leading. I think the Aussie just jumped up in anticipation of an equity rally. And I think equity is going to be driving. So I'm going to watch the equity market. But as I said, I'm going to watch. If I see a strong rally and risk, I might just lean back and just watch. I'm definitely not going to go long. I just, it's not working up here for that direction.
Well, that's fantastic. So thank you very much for a great session. If you have any questions, if you need any advice on the markets, ask myself or Beat. You know, I'm part of a damage principle. We teach and mentor traders at all levels. We've got an amazing one-day foundation launched in March. If you need some more information, let me know. Direct message me or give me a call. Beat has an amazing commentary, a daily commentary that you must, you know, just give it a go, give it a session. He's helped a lot of traders, and you know, some people have said some kind things about him, and you know, I read his daily reports, and they've really helped me on a personal level as well. So, Beat, would you like to tell our viewers something a bit more about that?
Yeah, sure. So what I do is I do sort of a little, I do the 4-hourly charts and the daily charts, and from the sort of predominantly the G10 side and its crosses, I kind of write my view on each of the pairs, the levels to watch, the themes that are out there or that I'm watching, and then I sort of write every few days. I write a piece called My 2 Cents, where I just sort of try to get my thinking, why I'm thinking, what I'm thinking, and so on and so forth. I'm usually not bad in sort of getting the stories together I think I'm not too bad sort of sensing what starts to matter in the market and put it, on alert. And that's basically what I'm sending out. So it's something for day traders, the daily chart, something for the macro guys. If someone has an interest to have a sort of free peek of it for a short time, give me or Patrick a ring, and we talk.
That's fantastic. Well, thanks again, Beat. It's been a pleasure as always, and good luck in Asia. And we'll be in touch in the week. And take care.
You too. Have a lovely set. Thanks for having me.
Cheers.
Cheers.